Federal court issues 5-year rule on silver. Stackers had no idea. A federal court decision puts what people are calling a 5-year rule on silver, and it changes how long investors and even regulators deal in the silver space. Check this out. If you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 Silver Eagles. Every month they hold this contest. Last month's winner never claimed his prize. We have 20 Silver Eagles just sitting here with no home. Don't be that guy. Click that link I left down below. Be the next winner on that list and take home that silver. Now, check this out. Under federal law, there's now a firm 5-year time limit on when the government or investors can take action against financial fraud or manipulation, and that includes silver markets. Basically, if a company lies or cooks its books and nobody catches it for 5 years, that case might be off the table forever. Actions for fraud have to be filed within 5 years of the violation. Here's the hard data. In similar financial cases, the SEC reports that 42% of enforcement actions they review, 42%, are time barred by this exact 5-year cutoff. 42%. That's nearly half the wrongdoing that just gets wiped out, all because time ran out. So if a silver company inflated reserves in 2018 and nobody found it until 2024, poof, the window to hold them accountable could be closed. Here's where it gets real for you and I silver stackers. Mining companies and ETFs tied to silver, they have long histories. Some go back decades, and that means a lot of old creative accounting could already be buried under this 5-year rule. If you're stacking silver through these funds, that legal cutoff can change how investors see risk. One research group found that investors, listen to this, investors lose an average of 8 to 10% more in companies with expired liability windows. They lose an average of 8 to 10% more because trust drops fast when people realize nobody can be held accountable anymore. So just get this in your head. Imagine a company overstated its production in 2019, but now it's untouchable legally in 2025. You might be holding their stock. You might be holding their ETF and have that exposure right now and never even know it. That's why this 5-year rule isn't some courtroom footnote. It's a ticking clock that could move silver prices if big lawsuits suddenly can't happen. If a silver mining company's problems started more than 5 years ago, that's your red flag. You might be investing in something that's past its accountability. Over 70% of silver miners listed on U.S. exchanges have operated longer than 5 years without a major audit restatement. Without a major audit restatement. That means there could be skeletons hiding in balance sheets and no one's legally able to dig them up anymore. Every silver stacker is frustrated with the manipulation of silver price. Just the clear fact that on average, on the low end, there are 300 paper contracts to 1 ounce of physical silver. Well, that's data we do have. Think of all of this information that we'll never get to because that 5-year window cuts everybody out. Well, get your own silver. Click that link in the description. Thank you, Money Metals Exchange, for sponsoring this channel. This is a great contest. Every month they're giving away 20 Silver Eagles. 20 Eagles every month. Click that link. Be the next winner on that list. Take home that silver. And I'll see you on the next one.